Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey, good morning. Welcome back to another week, another episode of the 0x Research podcast. I'm here with my co-host, Boccaccio, Triple Boccaccio, River Boccaccio, Salve Boccaccio. And we've also got Shonda Devins and Kunal Doshi from the research team. How's everybody doing today? Lots of big, exciting green candles. Everyone going crazy in the Telegram chat. Curious how you guys are feeling.
Go ahead.
Hype. I mean, I feel like the answer is pretty obvious, right? It's a hype all-time high day. We've been getting them a lot, but yeah, doing good and expecting the uptrend to continue, especially on hype.
Yeah, a lot of DATcos are getting announced as well, but I think on my radar now it's mostly macro. So last week we got the week unemployment report and the market actually went down. So it's finally like bad news is bad news. So again, all eyes are on like the inflation reports coming out this week and yeah, how that will basically affect the rate cuts next week, basically. So it's just macro-driven economy now.
And Bach?
Yeah, generally just happy. Market's up. I mean, everything is like, I'm not going to LARP like I understand macro very well. So I've just like, hype's doing quite well. SOL is, they just announced 1.65 bill in cash and cash-like assets, I think is the language that they use, which is a lot for an asset as small as SOL. And then, yeah, I think that's it. Like, market looks good. Like, pump's good. Pump's another one. It's going up. I feel like that's kind of like indicator of appetite into, or at least like general health of meme coins, which is like Solana, which is what's dominated majority of the market share of the Mind market share, the narrative over the past few years. Like if Bitcoin's doing well, Sol's doing well, ETH's doing well, Hype's doing well, you can't really ask for much, can you? Like all of the base assets that people are interested in are going up. There's narratives for each and every one of them. Some more like it's replacing gold, some more like we just paid 1.65 bill, but they're all doing relatively okay. So all good. IMO.
Yeah, I think that's a pretty good take. It seems like we're in the, we had the Bitcoin DATcos only for a while. It was strategy leading everything. And then the ETH DATcos came in and now a couple billion for some SOL DATcos. So there's been like some mini liquidity cycles there, but yeah, a lot of green candles kind of across the board right now, which is interesting. Not quite a 2021 style alt season. That's definitely not the case, but the assets that are doing well are definitely outperforming. So there's things to be excited about there. Do you want to do a couple quick shout outs before we get into anything? As always, quick shout out to Katana, our sponsor for today's stream. Thank you guys. You'll hear more about them later. You don't have to show my face now, but we'll talk about more about Katana later. Some other things we have to talk about. DAS London. It's next month. Boccaccio himself will be there.
Others. Shonda to come as well, right?
Shonda Devins will be there.
Potentially, we'll see.
Potentially, we'll see. But Shonda Devins will be there. I know Mark Arjun will be there. Several folks from the research team and across Blockworks, and of course, industry giants. So if you want to get your tickets to DAS London next month in October in London, you get £100 off. 0x100 is the code. Check out links in the descriptions or check out the DAS London website. And hopefully, Bach, we'll see you there. Outside of that, Blockworks, we're hiring data analysts. So we're hiring research data analysts right now. If you are into on-chain data, you love digging into and getting into the weeds with SQL and figuring things out, check the link in the show notes or on our website at blockworks.co to find the link to that. We need more data people. The heart of Blockworks is data. So if you're interested, you love all things on-chain data, give us a shout, reach out, and we'd love to hear from you. All right, let's get into it today. Talked a little bit about hype. Jakob's excited about, or Shonda's excited about hype. Bach's excited about hype. Of course, we know he's been excited about hype for a long time. We're in sort of like the 0x Research hype season, as he said, this weekend. Big news all over CT in the timeline is stablecoin proposals for Hyperliquid. I kind of want to let you run away with it, Shonda, but basically the gist of it from my POV, which I have basically zero info, is that you've got a lot of competing teams looking to kind of launch like the sort of like, chosen stablecoin for hype with different proposals, like as far as, offering rev share back to the token, doing other like incentives to kind of, get votes to their side or bring the community over to them. I don't know. Can you give us the what's what, like what's going on there, and where are you leaning? Do you think there's a particular proposal or proposals that are maybe taking the front run here?
Yeah, I would love to. Do you maybe want to pull up the slides? I have
Yes,
some
sir.
visuals to talk about.
I will bring those.
All right. Yeah. So I think Danny already gave a pretty good overview. Hyperliquid just announced that they're going to allow multiple quote assets on Hypercore. So before it was only USDC, but instead of the foundation launching a token themselves, USDHL, they decided to create a request for proposal. Any team that wants to build it that's capable has now the option to write about it on the Discord and the governance forum, and then the validators are going to vote which token will get the USDH ticker. And I think before I wanted to kind of talk about the problem statement, why I think this is so big, and it really comes down to the opportunity cost of just holding so much USDC in Hyperliquid that doesn't accrue any value back to Hype. You can see in the chart, it's around 8% of USDC supply is in Hyperliquid. So I think I checked today is like 5.5 bill. If you take a treasury rate of like 4%, that's more than 200 mil in annualized revenue that's being leaked and not going back into the ecosystem. And even more than that, I just tweeted about this. If you look at the agreement between Circle and USDC and Coinbase, Coinbase actually gets 50% of the USDC interest. So not only is Hyperliquid leaking this in their own ecosystem, but actually this is flowing out to Circle and to Coinbase. If anyone has any thoughts, feel free. If not, I'm just going to jump in and keep explaining.
Please continue.
All right. Yeah, next slide. Yeah, so, I mean, obviously, this is a huge amount of idle USDC. Until now, USDC is the only like quote asset that was able to be used. And also, if you looked at like the testnet on HIP3 markets, you could only choose USDC. You can't choose like a yield bearing stablecoin if you wanted to. And this was in the works for a while. Like on testnet, if you saw, they had already announced USDT and USDZZ that they were testing with to be able to trade. But now, few days ago, the foundation announced that I think this is going to go to mainnet. I presume it's going to be on the next network update. But in addition to that, they had reserved the USDH ticker for stablecoin deployers. And now they're going to give that away to any team that kind of wins the vote, which the validator is going to vote on. So I think there's like a bit of an importance nuance here that Hyperliquid is not launching their own stablecoin. But what they are doing is they are giving away the right to use this ticker that has been like held by them, right? And I wanted to highlight something else that we look at in the native market, which we're going to get to because they're one of the teams with the proposal. They have talked about that they've been working on this for a while, right? So I think teams knew that this was coming. Anyone that was familiar with the Hyperliquid and active on the testnet knew that this is going to be a next step. But it's just interesting that this is the way that they decided to do it.
Yeah, this was good. I'm gonna add a few pieces of thoughts here. First of all, can we put the thing away? I like to see everybody all at once. Very good. So the Hyperliquid team originally, they didn't release this until now, but I think you could buy other stable coin tickers over the past few months. Like I'm pretty sure they sold other like USD beginning tickers. The vote's been kind of interesting. Like if you're on the Discord, which I don't know if Danny, Kunal, I don't know if you guys are in and looking at like the Discourse currently.
Not as active as you guys.
It's like quite intense. I think they had a. I mean, the thing is that Max Fiegi is a friend of the pod, like officially, he's a friend of the pod. I have him on. I like his thoughts. I like him as a person. I think he's very smart. I don't think that he like got inside information. I just think he kind of approached it a bit too quickly and was probably pre-prepared, and maybe saw something on the testnet or on the scanner that other people did not see. I like in terms of what I think about each of them, I think it's probably like Paxos versus native markets, right? There's no like in between. If you want like enterprise plus institutional and you want something that's very tried and tested, very risk averse, I feel like Paxos is probably not a bad shout. I know there's a few like regulatory issues on that side. Like they have some New York license that you can't issue through technically if it hasn't been like also if New York hasn't approved Hyperliquid as well. It's like the NYSDF or something. I'm not a lawyer, so like I encourage everybody to do their own research. But on the native market side, it's a lot more difficult to bootstrap a stablecoin from the very. Well, I guess both of them would have to, but I don't know. I like if I had a vote, I would probably vote native markets, just because I also don't know how important it is to have the USDH ticker. Like it's a good ticker, definitely, but you cannot have the ticker and still launch a stablecoin, right? Like it's not anointed. It's not like Hyperliquid's gonna swap all of USDC into USDH the day that they bid the thing. It's just they're allowing you to buy this one ticker, which looks cool, I guess. But I feel like they almost made a bigger deal out of it than it should be.
Yeah, I agree. Just to add, I think to your point, both the teams, Paxos and Native Market, have said they're going to continue building the product even if they don't win the auction, right? So you might have like a USDH whatever, but you're still able to compete, and there's nothing against your stablecoin.
Yeah. One reason I kind of like native markets a bit more is because I feel like they will use all of the unique features that Hyperliquid has, like HIP-free, builder codes, like very ingrained into the ecosystem. I mean, Max did the round for every single one of these projects, right? So he knows everybody and he's like very active in the ecosystem. I don't know. Those are like my general thoughts. I don't know who people should vote for. It's actually quite tough. Like I love Max and I think he'll do a great job, but also I understand voting for Paxos to an extent.
I mean, yeah, I think like it's interesting that basically all the projects have indicated they're going to give a revenue share of like 95%. I think that's Paxos to like 100%. I think like for me, the important thing is what are they going to use that revenue for, right? I mean, if you put it into the assistance fund, like I was telling Bach about this, 200 mil on a protocol that does like 1.5 bill annualized, it might be a drop in the bucket. He disagreed with me on this, but I feel like if you take that 200 mil, you take 50%, which I think that's one of the proposals, right? 50% goes to the assistance fund and 50% is used to build the ecosystem. That's a huge amount of like stablecoin yield that you have to like build out HIP-3 products, Hyper EVM products. So I do think like that is a really interesting way. And for me, like my vote is definitely going to depend on each of the team's plans to use that kind of treasury yield to grow the ecosystem effectively. And then to Bach's point, I think Max is like pretty well positioned to do that.
Yeah, it's also like, I mean, who Agora said they want to do 100% buybacks. That to me doesn't seem very smart as well. Like who would do 100% buybacks? Like you're either going to make a lot of money on mints and redemptions, like fees on mints and redemptions, or you're never going to be incentivized to like actually further build out the project, right? Because you're not making any money off of it, or like, and you don't have any. I don't think they're going to launch equity for it. It would just be like, or like a token for it. It would just be like a weird thing, right? To launch, to just give all revenues to this one thing.
It seems like, I mean, given how all these proposals look, it seems like a lot of this is like a brand equity play where you get your name. You know, if you become anointed by Hyperliquid, then you get your name in front of people, and maybe by proxy, then you know, the community loves your brand as well. It's probably asking for a lot and probably wouldn't really materialize into anything else realistically, but it, like, I mean, from the details, just reading the details that Shonda has here, it's like Frax offered 100% basically back to the community. Agora offering 100% revenue share. I mean, Paxos 95%. Seems like they're, I mean, once you have one crazy proposal like that, then everyone else is kind of forced to do that. And so then it just basically, I think, sort of devolves into this like marketing brand equity play in large part.
I mean, they also did that after one of the other ones did 95% buybacks. I think the only one that's not doing buybacks is Native Markets. I think they're only doing 50% buybacks based on their like Substack.
It says 50% to assistance fund and then 50% for partnerships.
Yeah, which to me seems a bit more logical, right? Like, especially if you're a new stable. Like people think that, like I said, people think that they're gonna swap USDC into USDH day one, and it's not gonna happen. Like they're gonna need to go in there and do a lot of work. Another reason why I don't know if Paxos is up for it. Although you never know with these guys, right? Like they could hire an entire team, and then like really push for it. And also they bought somebody out, right, Shonda?
Yeah, they bought the team behind looping, like loop type. And that became Paxos Labs, which is going to focus on building out the stablecoin and some other products.
Yeah, it's a tough one. This is like probably the funniest thing on. That's also like the most intense and funniest thing. Governance is just so funny. Like it's always so funny because people are just commenting under it, and it's like I'm very invested in it, and I don't get the vote.
Something that I think is funny is, and you talked about it earlier, Shonda. You brought up the Circle stablecoin revenue, but it's like, I don't know that there's even an incentive for Circle here if their proposal would require them to give up, you know, if they'd have to give 100% of the interest revenue back to like hype buybacks of the community, then it's kind of a null point anyway.
Yeah.
I did see that Jeremy Allaire he commented by tweeting and basically saying like, don't believe the hype, USDC will be a part of Hyperliquid. And then it's just an old blog post saying that they're going to integrate, you know, CCTP for native USDC to Hyperliquid and HyperEVM. So they're not like fading the ecosystem in that respect, but the commentary around like them missing out on some like yield here feels like just nonsense slop.
Yeah. I mean, would you rather earn 2% on what is it, 5 billion, or like, yeah, so it doesn't matter to them. Another thing there is that this is like, I don't know, would you take the opposite of USDC if you could in any scenario? Like there's some companies I would take the opposite of in any scenario. Is Circle one of those for you? Like, would you always take Tether over Circle?
Oh, that's what you mean. I feel like they're pretty interchangeable, if I'm being honest.
Yeah. Not size-wise, though. Like, if
you
were to buy the equity in one of them.
Oh, well, I would take Tether, but if you meant using the coin like on chain, then I think they are pretty interchangeable.
I expect more teams will come in now. Like M0, I think will probably come in this before the. Are you guys familiar with M0? Yeah, I think they'll come in. It feels like a perfect natural fit for them. Sean, to say what you want to say.
No, I was gonna say I agree with Danny. Like these stable coins are becoming pretty interchangeable, right? If they're all compliant, if they're all backed by T-bills, and you see that like none of these stable coins really have any bargaining power, right? I mean, like 100% revenue is basically the requirement to even sit on the table and like take part in the discussions of like just getting a ticker on Hyperliquid, right? And like even if you consider Circle, they're also like backed into a wall, right? 100% of USDC on Coinbase, that interest goes to Coinbase. 50% of that is then split with the Coinbase again, right? So Circle already has like really thin margins. What can they do here?
Yeah,
So
but sorry, finish up, Sean. Are you done?
no, I'm done. I'm done. Yeah.
The thing is that everything is interchangeable, but it's also becoming not interchangeable as well, because if everything is Genius compliant and if everything is perfectly licensed, you actually need to look at the back end, right? Like who's holding, who's custodying their T-bills, who's custodying their cash reserves, what's their banking relationship like? And like for Circle, it was SVB, and they had a huge thing. If you guys, as you guys remember, like DPEG to 0.8, maybe 0.82. And also the asset makeup's very different as well. Like Tether actually backs some of the stables with Bitcoin, right? Bitcoin and gold. So like these types of things are going to become more and more relevant for us. Before you didn't care. It was like, oh, like these guys are doing an algo stable on Terra, and these guys are doing an algo stable on Solana. Like there's no difference. Like, oh, one of them is using Sol, one of them is using whatever, Luna. But now it's like it's gonna get more nitty gritty. Like you're gonna have to actually look into, and it's kind of difficult to find some of the partners for these guys. Like in TradFi, you can very clearly look up and then see reserves and see what everything's working. And we just had that proof of reserves thing last year. Do you guys remember when like everyone was like, "Here's our proof of reserves," and Binance, Chainlink, everybody like started publishing them. That's just becoming normalized now, and we don't have proper disclosures, proper like documents sharing what percent is being held and what. So it's going to become like it looks similar now, but I would imagine in 3 months it'll be a lot more similar than what the asset composition was like 2, 3, 4 years ago. But we'll also think it's a lot more different because we're going to be saying, oh, these guys hold it in SVB. That's dog shit. We can't be in that one, et cetera, et cetera. Shonda, does that make sense?
You just
Yeah.
quick point on that before Sean that goes. Yeah, I guess as of now, I think it's just really for the user point of view, is just what yield you get, right? So a lot of these like Web2 companies or like PayPal ran a massive incentive campaign last year. So I think before like users care about, okay, what are the backings and reserves, they're just going to care, okay, who's going to give me the best yield, which stable is the most composable in the ecosystem as well. And I think that's also like the key playbook for Hyperliquid. Like, okay, do I have an incentive to hold USDH over USDC? Like that stable could then potentially reach the dominance USDC has on Hyperliquid. And I think, yeah, we're still a bit of time away before people like really care about the back end and backing.
Yeah, I agree, and I think that's like for better or for worse, right? Like in crypto, you always have like this tail risk, like anything can be pegged. So people just discount it, right? They're like, okay, which gives me the best yield, and you just want to operate under the assumption that all stablecoins are safe. But I do think like Genius is helping this, and I think like Balk, you said the USDT is backed a little bit by gold and Bitcoin, right? But I think in the future they're gonna have to fully back that by treasuries or cash.
Yeah, I think probably big takeaway is that, Hyperliquid has been the, 100% buyback, shove it into the token like community. Like that's been the very strong kind of like voice and narrative there. So it's not surprising to see a lot of these proposals just like appeal to the community via that same strategy with, the stablecoin yield revenue. So I guess we'll see where it goes from here. Any other last thoughts on Hype Stables, or are we good to move along?
Yeah, I would say if you're into Hype, definitely like go into the Discord. apparently there's like the 10% airdrop is for anyone who posts in the governance forum.
If they do a Discord airdrop for hype in 2025, man, they're going to be printing some new Discord millionaires. That would be absolutely wild.
This is the most interesting governance stuff that's happened in a really long time, though. Sorry, I know we said we want to move on, but
no, you're good.
This is very boring. Danny, I know you don't look at governance forums ever. When was the last time you looked at a governance forum?
Probably when the Solana SIMD vote over the yield reductions. Yeah. Pretty similar thing, actually.
Well, that makes sense. That was also very controversial. It's fun. Like before, I feel like last cycle I was looking at a lot more of them, but
they used to be more. They used to be more meaningful of a thing, I guess. I think more more decisions and conversations happen like not on the forums anymore. Whereas in the last cycle, I think there was like a very governance forward part of the of CT or part of like crypto that really wanted that to be a thing. But I think the outcome there is kind of inevitable. Like people just don't. The average person is not going to spend all their time in the governance forums. That's just the reality of what it is. So
thankfully.
Yeah, thankfully. Although they will still spend all their time online, but either way, before we move along to the next thing, I want to do a quick shout out to our sponsors for today's stream. Thank you to Katana. This episode is sponsored by Katana, and their 1 billion cat campaign is live. Katana is a DeFi-first chain built for deep liquidity and real yield by redirecting chain revenue back to active DeFi users. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started, as well as EigenCloud. Thank you to EigenCloud. Is your treasury losing value to inflation? Learn how to make digital assets like ETH and SOL productive with uncorrelated protocol-driven staking rewards. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk-managed and aligned with long-term strategic goals. The Productive Treasury Report from Liquid Collective and EigenCloud outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Read the Productive Treasury Report today by following the link in today's show notes. Let's get back to it. Outside of the hype stablecoin stuff, another one of the big narratives that is kind of rolling over, or not rolling over, but kind of continuing over, spilling over from maybe last week or even the week before that, is like this TCG RWA, like Pokemon cards, other cards on chain. We've seen like a lot of platforms. I feel like this is something we've been talking about, Bach, where a couple months ago, I started seeing these like ripping packs for Pokemon cards like on chain start popping up. And then there were like 3 of them, and then there were 10 of them. And now there's like 20 of them. And then, then the cards, the collector crypt guys did an ICO, and the coin is, at 500 million FDV or wherever it's at now, after a massive run up. So there's kind of been this little narrative brewing. And up until recently, there haven't really been any tokens to like take a bet there on, at least not liquid. Cards is kind of that first big one, I would say. But I guess, yeah, go ahead, Bach.
They had Courtyard for a while. Do you remember Courtyard on Polygon? It's another one of those that just fumbled it. V2 is always better than V1, as I like to say.
Did they have a coin though?
I don't think so.
No, I think that was kind of the big, like at least from my, well, maybe they do have a coin.
Oh
no, they have an NFT. They have an NFT, so that's different.
Yeah, no, they don't have coins, but like, I mean, even the traction till now, it's still pretty impressive. Like, I mean, they're doing much more volumes and revenue than any of these competitors in Solana. So I wouldn't be surprised if they run some points campaign and decide that, hey, now is the time to.
Yeah,
it would be smart. You wanna hop in right when the plate is hot, like with IPOs, like all the companies coming to the forefront now that there's liquidity that's aping in.
Yeah.
Were you gonna say something, Bach, or no?
Sean, that question. Sean, that you're a Zoomer. I think as Zoomer as you can get. Is this something you guys do? You like open packs cards? Or were you or people very into Labubus?
No, but I guess it's a different crowd. I'm more into like FIFA packs, if that counts. Okay. If they tokenize some FIFA points, I would definitely trade that. But
so like gaming, you'll do like gaming loot boxes.
Yeah. I mean, FIFA is also like super addictive, right? And you have to reset it every year. I was talking about this in 2023 for a gaming report, and like how they need to start implementing these types of things. I think I was writing about Parallel back then because they had the trading card game, obviously. Not as relevant. RIP. One of my bags, longtime bags, was a big fan of them. But yeah, like FIFA would be a huge one, right? Like,
Can
I
you
mean,
resell on FIFA?
yeah. So the thing is, like, FIFA used to have like a really good market system. That's actually where I started trading. I was like trading FIFA points, like selling my friends' players for like football shoes. But now they're like trying to control the market so much with the price ranges. Um, it really takes the fun away. But to the point, if you could like tokenize packs and like trade those players, it would add such an amazing element. But then again, I mean, we're traders, right? So maybe like we're the 1% of people who find that interesting, and the other people just want to play FIFA.
No, but like foot trading has always been a thing, right? Like people, you would transfer accounts, you can sell your, are they called coins, foot coins? I can't remember the name now. But you can like sell your coins by transferring them. And that's what you mean by the transfer value things, right? Because I could list like a bronze and you could buy it for 10K. But I assume they don't let you do that anymore.
Yeah, exactly. Before you like list a bronze player for like 10 mil, other person would buy it. That's why you get the coins. But now they have like price ranges, where they basically like manipulating the market for their own sake.
I imagine Pokemon probably also starts getting upset about this stuff, right? Like they don't really seem to me like a super IP chill company.
I don't think they care, or like I don't know that they can like push back against secondary sales of the cards, but maybe when it comes to like creating, these different marketplaces, I think Counter-Strike is another big one, right? They have a massive like skins marketplace, and that's like there are all these like third-party websites where you can like transfer your skins like out of your account into like a website to then trade. So that feels like another good one, but
Yeah. To answer your point, Bok, I did speak to the teams today, and then I did ask them the IP question as well. There's not much issues here because technically it's the same as what eBay does, right? It's just a more efficient version of eBay. So there is no issue there. But if you were to build, like, let's say you build like a game using these tokenized cards, then you're starting to get like, okay, it's a bit gray area. So as long as you keep it simple for now, at least it's fine.
Yeah, I think this is a pretty good, like, a lot of the things that ETH people were talking about, or like I guess DeFi people were talking about 2 years ago, ended up being true. Like stablecoins are really a great way to transfer value from like cross borders. It's a great way to hold assets. So it's like the rest of crypto, and you can borrow, lend, etc. It works. I wonder if like the NFT promise is going to be fulfilled by these trading card games or whatever, like these gambling things, because it's a very intrinsic human desire to collect, right? Like we were talking to Ryan Connor about this, who my goat bought Charizard cards somehow. Like he did something for Charizard cards, right? Nostalgia. I think he's like whatever. I don't think he bought it online, to be fair, like an NFT, but like people want to buy this kind of stuff and they want to gamble. You can see like Labubu went crazy. I think Target, I wrote about this, but like Target made upwards of 600, no, Pop Mart made upwards of 700 mil in the first half of 2025 on Labubus. So like there's a lot of money floating around. I mean, Beanie Babies were a whole thing back in the day, although they don't have like lottery aspects. So I imagine like this is actually quite an efficient way of doing it, unironically.
I guess Kunal, you grabbed some data on some of the trends here. Like, is there just like a meaningful like Pokemon card trend that's happening and it's like spilling over into crypto, or like what kind of where are your thoughts at from digging in?
Yeah, like I mean, happy to share. Like a lot of charts are going around on the performance of the asset class itself, and like year to date, like the Pokemon card index is up like over 60%. So it's pretty much outperformed like all of the other asset classes. And interestingly, it's not just Pokemon cards, right? Like if you look at the other sports cards, they also have done pretty well. So it's a phenomenon across the TCG space. And there are a couple of reasons for it. Like a lot of it is like, I mean, we grew up here collecting these cards, and back then we didn't have a lot of money, so we could only buy a few. But as our incomes increased, we were able to buy these cards, and that's how like they started becoming popular. And then COVID happened, you got that whole Steamy coming in, and then you had the whole phenomenon like with the social aspect of opening these cards like live created, like it was much more entertaining. And you also had a lot of celebrities like shilling these cards. A funny one was, so basically the Pope signed a Pokemon Populio card, and that also grew pretty famous. So you have like this kind of moments that encourage people to collect the cards and really hold it for speculative value. And it's not just like, if you would think that a lot of this is happening on like on chain, and like in real life no one's really trading this, but that's not true. Like so I did some digging up on data. So if you like physically buy this, you can do it through like Walmart or Target, and this year Target expects to like do 1 billion in trading cards for revenue. Walmart had a 200% spike in demand driven by these trading cards. And like even on eBay, so eBay actually posted its best quarterly revenue recently, and that was solely because of Pokemon card sales, which had like triple digit growth in like consecutive quarters. So you're seeing this like phenomenon of collecting and like speculating on the value of cards happening off chain itself. But there are a lot of inefficiencies, right? Like if you buy from Walmart, let's say I get a card, but I don't want it. Like to resell it back, it's a pretty tedious process. So that's not efficient. And on eBay, the fees are very high. A lot has been talked about this, but yeah. So these platforms like Collector Crypt, Fidgetals, they solve like key pain points, and that's why you're seeing such a lot of speculation happen around it. And I mean, currently, like Collector Crypt is the only like liquid way to get exposure to this market, which is why the token price has done so well. And yeah, weekly volumes as well. So an interesting stat. So last week, the total volumes traded on these platforms was 85% of that done on OpenSea. So that's pretty impressive. So yeah, like it shows that, you're right, Bok. This is an actual use case for NFTs. And I mean, talking about tokenization, right? A lot of like thought is given like, okay, we should get stocks and bonds on chain, but that's not really like, I mean, talk to an average consumer, which person goes like, hey, you know what? I want to trade this stock on chain. No one does that, right? But this could be an actual asset class that people are excited about. So I do see a lot of promise in it. But of course, like it's still early days. It's still like, it's not perfect, right? So, I mean, if you go to the next slide, Danny, sorry for that. Yeah, just to highlight this. So like, if you zoom out, you can see like a clear growth in revenues. But if you zoom into daily revenues, there's actually a lot of fluctuation. And what happens is there's a lot of days where you see a spike, and then the next day you could see a lot of people selling their cards back to the gacha system or the claw system. So you get like the platform itself incurs quite a bit of cost to buy these cards back. So you get a lot of fluctuation. And if you look at the last 4 days, you see like Fidgetals has overtaken Collector Crypt in revenues, and that's because Collector Crypt just ran out of cards to put in the gacha system. They didn't expect so much demand, and Fidgetals had a point system running. So basically, people were like, okay, if I can't buy it here, I might as well trade on Fidgetals, because even if I'm not making money on the cards, I'm still having that potential upside for the airdrop. So it's very tough to like differentiate yourself from competitors, where all you need is someone to offer like a points campaign, and that is very easy to draw users from one platform to the other. So yeah, differentiation will be a key factor for these protocols moving forward. Yeah, I don't know if you guys have any questions. Happy to answer them.
I guess is this mainly a Solana phenomenon, right? Like Courtyard is big, but apart from that, there aren't that many things happening on other chains.
There are a few, like, so I did a comps analysis. There's one on Abstract, there's one on Ronin. So a lot of them have like, they try to differentiate them differently. So for Courtyard, what they have is in their gacha set, they have sports cards as well. So that's the only one that has sports cards in their gacha mechanics, and that has been quite a hit product for them, I would say, because there's a few times that I've clicked in and the gacha for the sports sections are actually sold out. So it shows that people are actually going in to get that. And So I'm sure the competitors will look to, onboard sports cards as well. But that's the thing, it's not easy, right? So these platforms have to actually physically source these cards from either collectors or eBay or like a few institutions who professionally do this. And it takes time to build those relationships. So if you're trying to go into a new vertical, again, you have to establish the specific relationships there. So at least that gives Kotya the edge in the short term for the sports cards aspect. And I think moving forward, the platform that really wins will be the one that can source the largest number of cards at the highest rarity possible and at the cheapest cost possible, because that lets you stock the gacha machine and keep the fuel going. Because the moment your competitors die down, then you basically vamp away all the volumes. And yeah, that's the edge. And you can, in the long run, for these platforms to really be sustainable, you got to build utility around these cards, right? Because currently the margins are very thin. So let's say, like, even for the revenue itself, it's currently like a 20% net revenue margin. But if you include the cost needed to buy the cards itself, like, because you have to source the packs physically, that drops down further to like 6%. So it's a very thin margin business. So moving forward, you got to add like other, like, utility around these tokens so that you can open up other revenue drivers. And yeah, I talked to both the platforms today, and both of them do recognize this. But obviously, in the short term, your main aim is to get as much inventory as you can. And once you get the users, once you grow and have enough revenues, you could, further build and open up other new sources, basically.
What fees do they charge? Sorry, Danny.
You're good.
What fees do they charge on on average on the gacha machine versus on the sales or on the selling?
Yeah, so the marketplace is like a 4% fee for a collector crypt, but most of the volumes actually are coming from the gacha machine, like you mentioned. So the edge there is, so for collector crypt, they're able to source a lot of these cards at like 80 to 85% of their market value. So they're entering itself at a discount, basically. And how they can source it is, so if you buy in bulk, or if you have like proper sniping tools in place, or you can, like, a lot of collectors, like, instead of paying 13 to 14% fees to eBay, having to handle all the shipping, I might as well sell it to someone who's giving me like around the same rates, and it's, handling the whole process for me. So that's how they can source these cards at a cheaper price, and then Collector Crypt can then list it. And the how it works is, so it's like, when people spend on the gacha, let's say I spend $50 on the gacha, and I get a card, I don't like it, it's a $50 worth of card, I sell it back for $45. So how the company earns it is that $5 margin, right, basically. So the ideal case for the company would be, I hold on to that $50 card, because in that case they earn $50 minus $35 the cost of acquisition. In that case, they're getting $15. So yeah, that's the ideal case of the higher margin scenario.
Very cool.
I guess you get a ton of money if you can cycle the same card through a bunch of times, right? If you're buying it back.
That's true.
Right.
But
so
I guess, yeah,
the ideal, I would have to imagine the ideal would be you pull like the rarest card, but then like as the business, you already paid for the value of that card, whatever it was. So then if the consumer is then going to like sell it back to you for a 5% discount, and then if 10 other people open it, like you just get to clip, X% value of that card every single time, assuming they're just going to sell it back into the platform.
Yeah, that's
if
true.
the odds on the gacha play out, right? Because you're rolling however many times to hit that rare card.
Yes. So like it's also a tricky dynamic there, where let's say I'm getting a rare card, like it's really valuable. The chances of me keeping it are also slightly high. Like less people would recycle it back, and it's a higher route of me recycling like a weaker card in. So what could happen eventually? The quantity of weaker cards gets higher, which kind of skews your return on the gacha downwards, which means less people roll. So it's like a multiple factors that kind of influence it.
That's interesting. I guess the biggest thing to me that I'm thinking of is like, these are just more efficient like card shops. Like that used to be such a big thing, in the early 2000s, to have like an actual physical card store to go into. But I mean, your operating margins are reduced, and also your like, you know, your customer like potential TAM is much larger if you're just an online, you know, slot machine and like ordering business. You can sell to people all over the world versus like a local place in some small town, which feels pretty meaningful. And obviously the Gamba aspect is a it's a pretty big unlock as well, I think. Not that card packs weren't already Gamba mechanisms, right? You're already, you know, buying packs like direct from the company, and they're, you know, you're rolling what cards you get out of the pack, but this is like built on top of that.
I mean, the one part of it that you couldn't gamble, which was like you selling it back and then getting your money back and then doing another pack. Instead, you like insta sell it back and then put it in the machine, you know, the slot machine. Can you open packs on the thing? No. Yes.
Wait, what do you mean? Like open? Like,
Yeah, some of them you can open packs.
like stream it? Like how?
Yeah.
What do you mean?
Yeah, can you like stream it? Because I feel like that's a big. That's one of those things that older people don't understand. Like, my father will see my like brother watching a video game or something. It's like, why are you watching a video game? You should just be like playing it. Or like, why would you like watch somebody open a sneaker? Like sneaker openings were a big thing for some time. I'm sure they still are. Like opening up like a Pokemon card or something. Can you live stream on it, or is it like, is that irrelevant? And
I think it might be different to what you're asking, but I know like Rip.fun is the one where they like they like take a picture of every card and then they like put them in the packs so that when you open the thing on the website, it's like okay, you got this card, and you see like the real physical thing. But obviously that takes some time to do. So I think they kind of have like they're limited in how many of those they can have available.
And you gotta trust.
Yeah. And you're trusting them to do it.
Yeah, you can also just create an online version of it, right? Where it's like it like sends you the card and there's like a virtual opening for you.
That's kind of like what the classic NBA Top Shot was from last cycle. Was you open packs and they like did the animation of like, hey, you got these 10 cards or whatever. I guess the other thing is like, I don't know how much of this is like a cyclical trend, because I feel like one of the things we commented on was you see like bigger, like when Pokemon last time, it became a bit of a phenomena, and then like big streamers, kind of like Baka's mentioning, where, you know, they buy the really expensive, like, you know, the old first edition like Pokemon base set, which are like tens of thousands of dollars to buy a box of those or whatever, and then they open it live on stream for like 100,000 viewers, and like it's crazy, it's a crazy event, and then maybe that compels more people to then like go out and look at cards and buy some. But at some point, like, you know, there's not going to be more people to clip, you know, 50K into a sealed box of cards. And so like some of that hype kind of dies. But I do like your point that I mean, there's a ton of card like brands to expand into. So if the Pokemon hype dies, they can kind of expand into Yu-Gi-Oh and Magic the Gathering and Labubus and everything else.
Do you guys know what these are? They're called Sony Angels.
No, I've never seen this.
They were like Labubu. They weren't as popular as Labubus, but they were somewhat popular. But it's just like another collectible, right? So I feel like it's the same as like perps, where it's like there's always, I mean, there's BTC ETH, which you always want to trade, like, and those always have the highest volumes. But there's also like flavors of the month. So if you're operating one of these exchanges, you just want to list the flavor of the month or the flavor of the quarter. I don't know the cyclicality of the new assets here, but and then you can probably make, and I assume there's like a baseline interest in Pokemon. Baseball cards are apparently an American thing. I'm not sure, et cetera, and then like you just supplement that with new flavor of the month, Sony Angels, Labubus, et cetera.
Yeah, I guess to that point, Bok, but it's not easy, right? Like the flavor of the month, if you want to change, it means you have to acquire all that inventory, which is a lot of money. And with already thin margins, that's not something you can afford. And what that does also, you end up with a lot of like, now you own the inventory of the last collection, which, okay, what do you do with it? Do you like dump it? Like, you know, or do you, it's tricky. So it's not easy. I think more of these platforms will choose to focus on one vertical, and once they have decent margins, decent flows of revenues, then they'll start flowing to others. Yeah.
Jakob, any final thoughts? Close this out.
Yeah, I mean, for me, it kind of extends beyond like this card collecting. It's not my thing, but I think it is really interesting to see like how well our system actually works already, right? If you like compared to the legacy systems, I think eBay Canasta like charges 13% fees. Like, okay, you can already have it have an NFT stored in your wallet, right? You can already have like proven randomness. Then you can take that NFT, you could take a loan against it, right? All you need is like for a platform to accept that asset as collateral, right? You could theoretically tokenize that. You could like trade it on an AMM. You could create like a HIP3 market as long as you have an Oracle price for it. You could create a prediction market about the resolution of the HIP3 market that's based on the fractionalized NFT, right? I mean, there's like we already have these building blocks, and it's gonna be like really, really interesting to see how this plays out. And it always is gonna like start off with speculation, right? Like people have the packs are not enough. We're gonna need to like add a liquid token that we can pump like 20x. That's gonna get people interested.
Yeah,
but
HIP-free markets have their own HLP pools, I think. So you can also tokenize that and then borrow on that and then buy more spot Pokemon cards and then loop those, Pendle YTPT, deposit into lending markets. Dude, it's actually kind of fantastic how much we can add. Like the thing is that like the health of an economy is like, or like the health of a banking system is like you can create $1, but you can make that into infinite amount of dollars, right? It's the same in crypto. You can take $1, make it into infinite amount of dollars. That's very good. It works very well. James Christoph's gonna kill me.
Actually, yeah, we can. Blockworks Research can come up with a proposal for USDH market backed by Pokemon cards.
I like this. I want to get long the rarest Charizard looped PT on Pendle Yield and just ride that into the sunset, because that the most valuable asset ever created. And when we build the stablecoin market on top of it, it's undefeatable.
Were you a big Pokemon guy?
No, I was not.
What were you? Yu-Gi-Oh?
I feel like I had a little bit of everything, like as a kid. Like kind of followed the trends, but was never like super into any of them in particular. Probably Yu-Gi-Oh a little more than Pokemon though, but they were all like phases. You know what I mean?
Yeah, right. And because I'm not still playing Yu-Gi-Oh. If that's
yeah, I'm not still collecting Pokemon cards, right, guys? We're not talking about collector grip on the stream for any reason in particular, right? Before we get to a last quick segment, I got to do one last shout out. Our sponsors for today's stream. Thank you, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem primitives, assets, and partners like Morpho Chainlink and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started, as well as EigenCloud. Thanks to EigenCloud, corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. A new industry report from Liquid Collective and EigenCloud lays out the next evolution of the digital asset treasury, moving beyond just passively holding Bitcoin to actively making digital assets like ETH and SOL productive through liquid staking and restaking. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Read the Productive Treasury Report today by following the link in today's show notes. I want to say thanks to EigenCloud actually for setting me up to talk about TreasuryCos. Just for one last quick little tidbit, this seems to be maybe like one last little pump or like another round, like we mentioned at the beginning, for maybe SOL, but also like Ethena is pumping off a DATco.
Well, Ethena also just released. Did you see the MegaETH native stable?
Oh, did they just drop something while I brought this up. That's insane.
Dude,
I-
my fucking producer tagged me in it.
I predicted that.
Producers, go.
Okay, so wait. So MegaETH here. Let's pull it up. MegaETH and Ethena unveil USDM.
Wait.
MegaETH's. Wait, you hate me. Okay. Unveil USDM, MegaETH's native stablecoin whose yield will be used to subsidize gas costs to sub-cent and provide revenue for the chain, which will be used to acquire assets. So very
What
similar to a USDH.
What assets? Pokemon cards.
Pokemon PTs. Let's be real.
Yeah, this is. Let's chat about this.
Interesting. Interesting partnership. I guess MegaETH. I mean, like expected to go live relatively soon here. I guess how meaningful do you think this is for like Ethena relative to it for MegaETH?
I think the most relevant thing for Ethena is Pendle and Aave, and in addition to that, the DATco that they have. I think this is good news, but not like, holy shit, I need to long this right now news. It's more like, oh, this is interesting. They're still doing work in the back end. It is cool, and I like the idea that Ethena is working as a white label stablecoin provider. Well, this makes it seem like they're working as a white label stablecoin provider. The only issue is that I feel like the USDE name is pretty like strong, so I don't know why you would want to instead rebrand as USDM. Like part of the reason why USDC doesn't have to bid for USDH is because USDC, the name, is very popular, and I would say USDE is maybe not as popular, but still a very popular name. On the other hand, this is probably really good for like stablecoin farmers, Pendle bulls, or like people who love Pendle, Aave people, because it's like clearly going. The thing is, the good thing about Ethena is that it's like one of those things that brings in like secondary and tertiary products, right? Like there needs to, where Ethena exists, there will always be Pendle because 80% of Pendle is Ethena. So Pendle's gonna launch on MegaETH, which is great for TVL, but also great for other like points programs because Pendle can tokenize points. So that's probably very exciting. I think it's slightly more bullish MegaETH than it is Ethena, because I don't know if Ethena launches on every chain. Like they don't just go on any chain. They're just like, they need to have a reason to go on it. And I guess this is the reason for them is USDM, and it brings in quite a bit of TVL potential, and like good, I would say, secondary and tertiary products.
Yeah, I'll add one note here. They say they're using USDTB, the stablecoin or the T-bill product underneath rather than USDE. So I guess
completely ignore everything I said.
No, I'm just saying. So it makes sense that it's not anything in reference to USDE, and maybe better to just pick their own. I don't know. USDTB is kind of a mouthful, so maybe branding it MegaETH style is a good idea, and just have it USDM.
Yeah.
But yeah, it feels meaningfully interesting for MegaETH at least.
Wait, guys, I'm curious. Like, I mean, if it's just T-bill yield, why not just build something out yourself? Or like, yeah, why partner with Ethena here?
Well, it's like it's a lot of extra engineering work, right? And like a lot of extra legal work that you have to go through because you need to get it issued somewhere, and then it needs to fit into like jurisdictions and regulations everywhere. It needs to work. You need custodians. You need banking relationships. Versus like Ethena, I don't know how they're gonna do it. Revenue share, flat fee, whatever their agreement is. It's just, I would say, probably a lot easier for them. Also, Ethena has existing distribution, right? Like they already have very strong relationships with Pendle, so maybe Pendle will still come, even if it's only for like a 4% yield product and not for a 12% yield product. Did you guys lose me there for a sec, or was I good? That's it. That's
I mean, like to me, there are two things, right? Like, firstly, it makes sense. Like, I think we see the trend L1s, L2s. Transaction revenue is just not a good way to monetize. You're gonna have to keep lowering the fees, applications that generate their own fees are gonna want to like keep those fees to themselves. So you do need to like find different ways to get revenue. And I think that's the approach here, right? Like your USDC stablecoin yield flows back to you. So then my second take is like it's just again bearish for Circle, right? Like these stablecoin issuers have like so little leverage now to like retain their yield, and it's obvious that like applications, the L1s, want a cut of that yield themselves.
One additional thing I wanted to say is it's pretty cool that they're going to subsidize gas costs with this. I feel like it's kind of an unexplored, or I guess underexplored thing. Is like, I don't know if they're using this. I don't know if it's live on MegaETH. Like the Paymaster thing. I think it came with 4337. 4337. ZK Sync has it and did their airdrop with using it by like sponsoring gas costs. I assume they're gonna do something similar. It's interesting. You want as low fees as possible, and if you can cover that with the thing is, I don't know if like would you prefer getting extra yield or would you prefer having to pay no transactions?
I guess it depends from sort of like a capabilities perspective. Like if this means you can, if transactions are free and then you can kind of take that out of the like TX building and like maybe like complex transaction execution capabilities, maybe that lets you do like more interesting things. But on the flip side, like if the like it's MegaETH and they're running a really big fat beefy fast sequencers and with the expectation of low fees in the first place, like if they were already going to be sub-cent, I don't know how much that really matters to the end user if it was if they were basically already free to begin with. But probably the more meaningful thing is that if they'll use some of that revenue to further promote other things within the ecosystem, similar to like some of the proposals for on the Hyperliquid side. But I don't know, that's a toss up. Like for incentivizing early users, like maybe you do want that yield to be given back but then again, like we see so many cases where mercenary capital hops onto an ecosystem and they juice that for a while and then they give up when the next best thing comes along. So maybe it's not even worth doing that anymore. Hard to say.
I'm wondering if this means Ethena is gonna make their own proposal for USDH. Does it mean the product seems pretty similar, right? Like USDM, 100% fees back to the ecosystem. Maybe they had to make this announcement. They had to like release it early so they could make their proposal.
Potentially.
I guess the upside for them, like as a smaller, and maybe that is one of the hidden upsides for some of these smaller stablecoin teams in these proposals, is just like expanding the overall liquidity base and like market for their stablecoin. Like Circle doesn't, it's not going to be that impactful given their size already, but USDTB, like if you wanted to meaningfully grow that, sure, give away the yield to these communities, but like build out the overall liquidity and the amount of players that are transacting in it could be meaningful to just grow its size if you want it to like eventually be this institutionally adopted, stablecoin currency. I don't have any other big thoughts unless you guys do. The only other big thing I was going to say on the DATco side, this MegaETH thing was unexpected, but the WorldCoin also has seen a pretty massive pump off of DATco news there. I don't know. It just seems like we're going down the line, and now some of these altcoins are getting absolutely massive pops off of like very outsized, raise announcements relative to like the circulating supply of the coins, which makes sense. I mean, if you're going to shove a silly amount, 9 figures plus into a coin that is maybe only $1 billion circulating, you're going to move the market up, plain and simple.
I don't think we've gotten silly enough yet, if that makes sense. Like, I don't think Ethena and WorldCoin, and you're like, oh my god, this is getting really, really intense. We can't have DATcos anymore. I think we can go down a couple more levels, like Camino DATco, and I'm like, you know what? Like, yeah, we're getting a little risky. And then if you see something like FTT or Luna DATco, and you're like, guys, we're out. You know?
Yeah, pumping a dead coin, that would probably have to be. I don't know if you can go much lower. Taking something out of the grave with a DATco. That's
like that makes the most sense though, right? Because then you get two benefits. Like you're pumping, because right now DATcos you're pumping one asset, and that's the equity, and you're taking it from $1 to whatever $300. But with FTT, it's very simple. You can take two things from 1 to 300, or whatever FTT market cap. I will not be the chairman for an FTT DATco, but I will also not be the chairman for an FTT DATco. If that makes sense.
So the box already accumulating. He has 1% of supply. Yeah, I mean the move here, you pick something that's like 10 mil market cap or less, and you send it to the moon. But yeah, I mean all of it just becomes more and more like engineering your exit liquidity for a trade. And anybody who's late to that gets rinsed. So that's kind of tough to contend with.
Yeah.
Wait, Bob, to add on your point on like crazy DATcos, wasn't there one on anime? That's pretty crazy.
I didn't.
I think it's a small one. It's 2.5 mil game square added. Yeah, but still, anime coin. Come on.
That's kind of getting a little silly. I don't know, 2.5 mil is quite a little bit of
it's
money.
small.
Want like
but for like, yeah.
You know, I want like 100. If they're doing like 200, 300 million to anime, then I'm like, you know what, guys, let's get that back over here.
Yeah, just like 5x the circulating market cap.
Like that's when we're getting silly, you know, or like when it literally stops making any sense. I don't know. Crypto's in this really weird spot where it's like Putin this morning was like, "Oh, we noticed that the U.S. is pushing stablecoin dominance, the United States dollar's dominance for stablecoins," and then we're like, "Oh, anime DATco is actually not that crazy." Like there's like two things. Like on the one side, it's getting very, very serious. It's being used by nation states to further economic interests. It's like clearly very large companies like Stripe are building meaningfully, not like last cycle where it's like Polygon and Starbucks partnered and it's like a little sticker. And then on the other side, we're still getting really financially engineering and getting really silly. But let's see.
Signs of froth are indistinguishable from signs of adoption. You know,
yeah,
they always say that the Reddit NFTs and the Pokemon cards are gonna rip while governments adopt stablecoins. I guess there's no way around it.
there's no way around it.
And you're gonna buy your Charizard PTs, and we're gonna launch the anointed stablecoin of Hyperliquid on the back of Pokemon Yield.
Yep.
Awesome. We can close it out there, gentlemen. Thank you all for joining today. Appreciate all you listeners for hopping in. Bach, if you want to do any shills for the newsletter.
Yes. Everybody listen, we have taken back 0x Research newsletter. Research analysts write the newsletter every day, so we post our actual market thoughts. Make sure to subscribe. QR code bottom right. You can also just search 0x Research newsletter and it will come up. Yeah, I mean, it's, you know, Shonda wrote it today. He wrote his thoughts on, what did you write about today, Shonda?
You want to take a guess?
Hyperliquid. What about
Hyperliquid builder codes? Yeah.
We cover quite a bit. We even like release some free reports through it every once in a while, so it's worth subscribing to. I think it's the best newsletter in crypto. I think newsletters need to be two ways. Like one, it needs to be a summary of everything that happened, then you can just wake up. It's like news. And this one is more like you get like two analyst takes a day on like what they're looking at. And I think this is the only other valuable way. I don't like the mixing matching. So I think this is like a good way to do it. I think we do a good job. If you don't think we do a good job, you can always message me on Twitter and say, hey, can you change this? Can you change that? Genuinely, I really appreciate the feedback. But let us know and subscribe to the newsletter.
Heck yeah. Check out the newsletter. Check out this DRX Research Telegram if you can find it. Check out Blockworks Research in general. If you are interested in data, on-chain data, love SQL, again, we are hiring research data analysts. So check out blockworks.co. job listings, we'd love to hear from you. Otherwise, thanks for watching. We will see you guys later in the week. Appreciate y'all for tuning in and appreciate you guys for hopping on today.
Peace.
Peace.